I'm Wade Byers, the helpful mortgage man here with Benchmark Home Loans in the Middle Tennessee, Nashville area. And we are just discussing the Middle Tennessee real estate market and kind of what's going on in the mortgage news. So in the real estate market, what I'm hearing, basically we are slowing down a little bit. Inventory is getting low again, and the buyers seem to be fading a little bit, so the market's starting to slow down entering into the fall, which is kind of standard what typically happens in our market. But what I am hearing is there are a number of foreclosures that are about to hit the market. So what that means is not only is inventory going to go up a little bit, we're also going to have a pretty heavy rental market going on. There'll be lots of people that will unfortunately be losing out to foreclosure and will be looking for places to live. So that's kind of what I'm seeing happening right now, and that's the rumor I'm hearing about the foreclosures hitting the market. So big week in mortgage news. Lots going on as far as the financial markets are concerned. I've talked a little bit about this. You guys know that the current administration is looking for the replacement for Bernanke. The Fed chairman is about to step down, and it'll be time to replace him. So there's a lot of talk about that right now. And of course, the Fed is meeting right now this week, and will conclude their meeting on Wednesday, and we will find out about the bond buying program and what they intend to do as far as scaling back the amount of bonds that the government is buying, which is honestly kind of keeping rates low at this point. From what I'm seeing this morning, not to get real technical with you here, but mortgage-backed securities are trading much higher today than they were on Friday. What that means is interest rates should be a little bit lower today than they were on Friday. Not a tremendous amount, but we should have had some improvement. What that says to me, I believe, is that if we do come out of Wednesday's meeting with the Fed wanting to taper back some of their bond buying program, the investors right now don't believe it will be a significant amount. So I think what's going to happen is they're going to come out of the meeting. They're probably going to start scaling back what they're buying, but they're going to do it very slowly. If you remember back when Bernanke mentioned something about the economy was improving, interest rates shot up real quick because investors heard that as we're going to quit buying our bonds, which in turn is going to drive interest rates up. So investors started selling their bonds. So they want to avoid that happening again and are going to try to taper this thing pretty slowly is what it sounds like. So that's really a lot of what's going on right now. I really just kind of wanted to touch on that. I would expect to hear that we're going to taper that program a little bit, and that's probably going to drive interest rates up a little bit towards the end of this week. That's not a guarantee, but that's kind of what I'm seeing and what I'm expecting. So look for this again on Thursday. I'm actually going to do another report on Thursday at the latest to kind of let everybody know what happened on Wednesday and what to expect in the coming months. So as usual, I'm always here to help. If you are in the market for purchasing a house, I would suggest get to working on that. Give me a call, or anybody else that you trust in the mortgage world. Get you pre-qualified. Also, I have a new fan page launching on Facebook here soon, so be on the lookout for that. And then, like I said, I'll have another update out later this week. I usually just do this once a week, but I think this is an important week, so look for me again on probably at the very latest on Thursday. And again, I'm Wade Byers. Call or text me anytime, 615-335-3356. I'll be glad to help any way I can. Thanks a lot and have a great week. Bye-bye.